Hi, I'm Lisa Leiter. Here's your Chicago Business Today midday report. In this week's print edition, Crain writes about the recovery of local banks. Quarterly profits jump mostly on lower set-asides to cover loan losses. But despite the better bottom lines, Chicago banks did not see a jump in their stock prices as investors are looking for loan growth. PNC Financial Services is the area's fifth largest bank in terms of deposits, thanks to its 2008 buyout of National City. PNC recently said it plans to beef up its Chicago presence, adding 60 locations over the next 5 years. I spoke with Jim Dunigan, Chief Investment Officer at PNC, and began by asking him about demand for loans.
Demand for loans has improved, Lisa, ever so slightly. So we've seen a pickup in economic activity in the third quarter, welcome pickup, and we have seen a slight increase in demand for loans, which follows that improvement in economic activity, and we expect that to continue.
Do you think businesses are still hesitant to take on that extra debt given the kind of uncertainty and the kind of volatility that we're seeing in the markets just this week?
Often what I hear is they're waiting for demand, but I also see that they are figuring out how to do business in these environments. So they've stopped fighting it. They figure the economic environment is going to be a little difficult for some time, and they've figured it out. They figured out what products consumers want, and they're growing in those areas. So I do see an improvement in many sectors of the economy, which is leading to that improvement in loan demand. But it's going to be a while yet.
Which sectors are you seeing the most improvement in?
Consumers, interestingly enough, although confidence figures would tell you that they're depressed, they're still spending. They have repaired their balance sheets. We expect the Christmas season to be slightly positive, probably adequate against the economic environment. Technology and business investment is picking up in this environment. Jobs haven't followed yet, but companies are in fact beginning to spend money to improve plant and equipment.
Well, let's talk about growth. PNC is growing in the Chicago area by building more branches. In what areas are you seeing the most growth here in Chicago?
Actually across the board, because we're sort of new to town with the acquisition of National City. We're growing the branches, we're growing the corporates and the institutional space, and particularly in wealth management. So we build that across those businesses and depend a lot on referrals back and forth to those businesses. That's where we do best. That's where we can build clients and find customers. So if we can have that model in this market like we do in others, I think we'll be successful here as well.
So let's talk about wealth management here in Chicago. Talk to me about the investors here versus other parts of the country. What makes a Chicago wealthy investor different from someone elsewhere?
Well, as I often look at, we say that all politics is local, all investors are personal. But I will tell you that in the Midwest, they do have a conservative streak to them. So I think they are very loyal to the providers, and they're looking for people who can provide a number of services and technology around that. But in general, I think they have a conservative nature to their investments, less maybe risk-taking than we see in some of the other markets around that. But they're all interested in their personal objectives, which is at the end of the day what each of us would like to achieve.
And what is your outlook for the economy and the stock market in the short term? We've got everything going on in Europe. What's your outlook?
Our base case is that we will avoid a recession for the U.S. economy going forward. We have seen a pickup in growth, third quarter improvement, preliminary numbers of 2.5% growth in GDP. Likely that continues in that 2 to 2.5% range through the early part of 2012. Jobs are picking up. The economy is not picking up at a pace fast enough to really add jobs at a pace we need, but we will continue to add jobs in there. So we'll muddle along. It will be a slow but persistent recovery. Positive news is that earnings in this environment have been particularly positive. So that provides a support to valuations for the equity markets, which I think will be recognized at a point when investors have more of an appetite to take on some risk in their portfolios.
All right, Jim. Well, we'll see. Thanks so much.
You're welcome, Lisa.
And that's this edition of Chicago Business Today on this Veterans Day. Be sure to check out our Veterans in the Workplace coverage at chicagobusiness.com/veterans. Thanks for watching. Have a great weekend. We'll see you back here on Monday.